Good morning, traders. Welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders where we are focused on the ES, the NQ, and how they move through the two-way auction process. So on my screen right now, you are going to see two different sets of information. The one on the left is a market profile chart, and the one on the right is a Bookmap chart. So what I do is I combined the information that I get from these two platforms to give me the ability to take day trades. The idea is I look at the market as an auction process. I ask myself, what is most likely to come next? Is the market more likely to go up? Is it more likely to go down? Or are we stuck inside a range and we're probably just going to go sideways for a while? By being able to predict what the next thing the market is going to do, I can look for entries for trades that have a higher probability of working out. So when we look over here on the left side of the screen and we look at the market profile chart, that helps us to see where the market spends the most time and brings in the most volume. And when we look at the Bookmap chart on the right, it's showing us where the liquidity currently is and how it's changing over time in the market as well. I just realized I need to open this up to the U contract. Uno momento. So there is always a little bit of confusion that takes place when the market has rollovers for the contract. I would say this week is the most confusing ever. I can't remember an instance of this ever happening in the past, but because the contract rollover is this week, okay, between Monday and Friday of this week, everybody is rolling over contracts. They're going to stop trading the M and start trading the U contract. Because there's a holiday on Thursday, a lot of software providers actually started rolling over the contracts on Friday of last week. And so that puts us in a position right now on Monday morning where things can get very confusing because price levels are totally different. Some people are looking at the price levels from the M contract. Some people are looking at the price levels from the U contract, and they're very different from one another. They literally paint an entirely different picture of what is happening in the market. So for example, I'm looking at my continuous contract here. So this is going to be the U for Friday. And what did the market do on Friday if we were looking at the U contract? Well, it made higher highs. It held the lows. It did not break the lows. And it basically just bounced. It pushed higher and it came back in. Last week, we were talking about this area between 60-20 and 60-30 as being a pin, and it came right back to that pin for the close. So if you're looking at that contract, the market was telling you it was in balance and it was a little more bullish. It was trying to break higher. But if you were looking at the M contract, it did quite the opposite. It actually pushed lower. Hold on one second, trying to get that to load. There we go. So the M contract actually broke to the downside. It broke out of this range and it closed much lower. So if you're looking at the M contract, you would have been bearish at the close on Friday. If you were looking at the U contract, you would have seen it as balanced, like the market is going to keep going sideways. So then I'm saying to myself, I log into my computer this morning and I'm trying to figure out, which contract should I look at? Well, then I look at the overnight range and I say to myself, what happened in the overnight and which narrative does it fit better? If the market was really bearish and it was going to keep going lower, the overnight range should have stayed lower or opened with a gap down, right? But it did not do that. What did it do? It came back to 60-20, right? Which was the area we have described as the pin. So both contracts are telling us the market is pinned. And that means I'm going to trust the newer contract, the U contract, and I'm going to trade that. So the way I'm seeing Friday's range is in between 60-17 and 60-83. That is what I am calling Friday's range. So as I refer to levels today, and I say I think if we get to Friday's high and we find support, we can go higher, blah, blah, blah. I am referring to on the newer contract, the U contract, not the M contract. Okay. I know that's very confusing and I wish it weren't so, but that's what we got to deal with. So that's how we're going to see it. Okay. As far as order flow is concerned, I will be switching back and forth between the M and the U today because order flow will be slightly different, depending on which contract you're looking at. So I will be looking at both and just kind of clicking back and forth between the two in order to be able to figure out where the liquidity is and how it's changing. So it's a little more complicated, but we'll be fine. We'll figure it out. All right, real quick, I'm just going to make a Trader Map Pro chart here to clean up some of this. Where's that at? Okay. So we're going to go to create. So I'm going to go to Trader Map Pro, get rid of that one, and then I'm going to create one for the U contract. There we go. And that should be good. Okay, so now let's get into the plan for the day, right? You're like, we get it, Charles. The contracts have rolled over. It's a little confusing. We don't know exact levels. We just want you to tell us how to trade today. Where do we go long? Where do we go short? What do we expect to happen next? Well, inside this area right here, between the overnight high, which is around 60.78, and this node of time and volume right here, around 60.38, I see it as a chop zone. First thing in the morning. What does that mean? It means I don't really know which way it's going to go as long as it's inside of there. It may go down, it turn around and come back up. It may go back and forth 100 times. I don't know. It may go in a straight line and break out. It may go in a straight line and break out. I don't know. Inside this zone, I have to just watch the market move, at least for the first hour of the day, to get an idea of what kind of business is taking place. Are buyers stepping in? Are sellers stepping in? Is it kind of a two-sided trade where the market is just bouncing between the two? You know, what is happening there? Okay. Once we get above the overnight high, if we get new buying up there, I will very, very quickly become bullish. I'm not going to wait around to get bullish if we get above that overnight high, because the balance that we have had over the last week is what we call balance by a pin, which just basically means the market was artificially being held down. It wasn't allowing the market to go higher. It wasn't allowing the market to go lower. It just kept bringing it back to the center of the range. Okay. So that may have just been for the options that expired on Friday. And if that's the case, the market can break away from this pin and begin to make a move today. So I don't want to wait around once we're outside that chop zone to enter a trade. I want to be ready to enter very quickly, because the market could make a big move today. Okay. Not that it will, but it could. So if the market gets above that overnight high, this is after 9:30, once the market is open, if it gets above that overnight high and turns it into support, I will be bullish for a move higher. The first target is testing Friday's high. Again, that is Friday on the U contract, Friday's high. If we get new buying there, it is then to head up and test the overnight high which is also this node right here around 60.96. Okay, so I suspect there will be some resistance there, but if it pokes through that, it is bullish for continuation higher still. The next targets to the upside is repairing a weak reference at 61.05 and then testing resistance at 61.12. Okay, so again, the market gets above 78, finds new buyers. We look to test 83. We look to test 99. We look to test 601. And if we can get through all those levels, we look for resistance at 61.12, which could reverse the market back down. Okay. If it doesn't, continuation higher still. If the market gets above that overnight high and it cannot turn it into support, so the opening bell rings, it pushes up there, and then it just kind of falls and it starts to pull back in, well, then we know we need more sideways. We need to spend more time inside the chop zone and keep going sideways. So the failure to hold that overnight high would be bearish and imply the market is going to pull back. The same exact thing with this node down here around, 60.38. If we get down there and turn that into resistance, well, then it's very bearish for continuation lower. And the first target is 60.17. If not, if it pulls back up, it means the market needs to keep going sideways. We need more chop. We need more balance. We need more grind. Right now, it's completely 50-50 in my mind, whether we're going to open and break out of this chop zone and start to make a move, or we are going to go sideways. I don't know. But what happens at those two levels, the overnight high and this node down here around 38, will give us a sign of what to expect next. Okay. And it will be important information to carry forward. I always like to start the week with what Jim Dalton calls his top-down approach. So we're going to zoom on out. And we're going to start by taking a look at the monthly candles, then the weekly, then the daily, because that might give us some insights as to what is happening bigger picture. Things are a little confusing intraday. Let's zoom out and see what's happening, from a higher time frame. Well, on the monthly, we are one time framing higher. It is bullish. There's no reason to assume that we can't continue higher from here. And the target on the monthly is new all-time highs. Okay. So as long as nothing changes, in the weeks ahead, we should be able to continue towards all-time highs based on the monthly chart. Let's zoom in and take a look at the weekly. So the weekly is showing us momentum in this bizarre trend line. I mean, that's one hell of a trend line that the market is holding. Oh, it's almost too perfect, but that trend line is a sign of momentum. And we were in a range for multiple weeks. Now we are one time framing on a weekly basis. So if we can get above Friday's high today, we are still one time framing on a weekly basis. And again, the target is the all-time highs. Okay. If at some point this week, the market pulls back down and gets below last week's weekly low, that will be a sign we need a larger pullback on this time frame. But for now, it's bullish and there's no reason to assume we can't continue higher this week. And then lastly, we will zoom in and take a look at the daily chart. This one's a lot messier. It's a lot harder to read. There's, a lot more flipping and reversing and flipping and reversing and flipping and reversing. But again, if we get above the high from Wednesday of last week, there's no reason we can't head to new all-time highs above 61.58. Okay. That doesn't have to happen today, but it's just, that's the direction the market is going. The market loves to get to levels where it ran out of business in the past. These all-time highs are begging to be retested. That doesn't mean the market is going to the moon. It doesn't mean the market is going to make a huge move to the upside. We may poke up here and then run out of steam and come right back down again in what you would call a double top. So it doesn't mean we're definitely going to keep going. But at this point, the market should want to at least get to those all-time highs and find out if we've got new buying or selling there. Okay. Any questions on any of that? We got 15 minutes till the market opens. Let me know what you got. If you are watching this in the Discord, just head over to the tab that says Futures-Charles, and you can ask your questions there, and I will answer them. If you're watching on YouTube, just throw it in the YouTube chat. Good morning to Billy K Welcome, welcome. Jay in the house. He says, Pirates, it's a rollover Monday in the trading paradise. That it is. Welcome to Crypto Writer. Jay says, hit that like button. Yes, please. Let me refresh the screen and see how many likes we got. We are at 21 likes with 87 people hanging out. Surely a few more of you want to smash that thumbs up button. Exceltha says, hi, I'm currently using Rhythmic. How can I use FX pairs like Euro GBP and Euro USD? I'm looking for a symbol and exchange, but failed to find it. Sorry, can't help you there. I'm not a Forex guy. I know all the Forex contracts have futures contracts that go with them. And so you may not be able to find the pairs, right? Like if you want to trade euro versus the dollar or euro versus, another asset, you're not going to be able to find those in the futures. But what you can find is just like euro futures or just, whichever, pound futures or whichever asset you want to trade. You can find the futures for just that one asset moving on its own. And then you can use Forex as a way to look for trades on futures. So for example, if a pair, has an extreme difference, like the dollar versus the pound or whatever, if there's some huge difference in that, you might go long the dollar in the futures contracts and go short the pound in the futures contracts and use that as a way to play off the two. But I don't know of any ticker symbol in the futures where you can trade the pair. That is purely in Forex. Trevor is here. Good morning to you. Rich in the house. Tides and Trades. Good morning and welcome. World 407. He says, I don't get footprint charts at all. Well, this is not a footprint chart. It's a market profile chart, but it's basically the same thing. So let me put it to you this way. And I apologize to everyone that's heard me use this analogy 10,000 times, but it's just how I make sense of things. When you think about an art auction and the way that an art auction works, right? The auctioneer starts the bidding. I got $1,000 for this painting, $1,000. Tons of hands go up in the air. Tons of people are willing to bid $1,000. So he lifts the bid, right? He says 1,100. Tons of hands go up in the air. He lifts the bid. That process will keep going. As long as people are willing to bid on that painting, as long as hands keep going up in the air, which is what we call volume, right? As long as volume is still there, then that bid will keep moving. Okay. It'll keep moving higher and higher. When that volume disappears, when there's no one left to bid anymore, there's only one guy left willing to buy that painting at that price. What happens? Sold. The auction is over, right? Well, the stock market is the same thing. It's just a two-sided auction. We auction up as high as we can, then we auction down as far as we can, and vice versa. And it's just, we keep auctioning one way or another. So if you're looking at footprint charts or you're looking at market profile, what you're basically trying to figure out is, where does that process come to an end? Where do we run out of people willing to do business? So for example, if we're looking at Friday's range, where do we run out of people willing to do business in Friday's range? Right here. Okay. Fewer and fewer people in terms of time and volume right in here. Well, where did the overnight this weekend run out of steam? Bam, bada, bam, same exact place, right? And so what did we see in the overnight near those highs? Fewer and fewer people, less and less time. Okay. So that's what we're looking at. We're trying to figure out, where are the areas in the chart where the market might run out of steam. If it's going up, where is it going to reverse and come back down? And then once it gets there, we're asking ourselves, what happens when we get there? Do we spend time? Do we bring in volume? Well, then the bidding is still going and we're going to keep going. But if not, if we run out of steam, where's the market going to go next? Right back down. And so that's what we're looking for, is that information that tells us who is doing business here right now. And we can look at the order flow to figure out where they might do business in the future, right? Where are contracts currently sitting and how are they changing over time? By being able to see those changes take place, we can enter trades. Okay. So the order flow, to me, one of the most powerful tools of order flow, is not that it necessarily tells me the market is going to go up or down, but that it tells me something just changed. When something randomly changes in the order flow, something is going to change in price. So if price is going sideways and all of a sudden something changes in the order flow, we're probably about to break out one direction or another. If the price is going up and something suddenly changes in the order flow, we're probably about to run out of steam and pull back down, and vice versa. So by monitoring both of these things side by side, by seeing where we're spending time in bringing in volume and where the market wants to spend time in bringing in volume and the changes happening there, we can also predict the future changes of the market. Boss Man in the house, good morning to you. He says the brigade is doing it bigger and better. I'm not sure what that means, but I agree. I agree with it. Grizzly Bull in the house, good morning to you. Ashwin is here. Thank you for the like. RK says for Zoomers, you should change the analogy to NFTs. No, because then I have to put in market manipulation into the equation, and that's a whole nother thing. If we're talking NFTs. RJ is in the house. Good morning to you. Liquid Juggled says, I don't understand the footprint chart with the alphabets instead of numbers. Okay, so again, not a footprint chart, market profile chart. The alphabet is time. So let me just take Friday's range. You'll see this in a few minutes when the market opens, but we'll just start with Friday's range. We'll expand out the profile. So each letter represents 30 minutes. It's like a 30-minute candlestick. Okay, so this is like your first 30-minute candlestick when the market opens, the second one, so on and so forth. Okay, so that's all it is. And why do we use letters? We don't have to. It doesn't matter. Some software uses little dots. Some software uses little squares. It doesn't matter what it is. Letters just makes it really easy to know where you are in the day. To be able to say the A period just got above the B period. I know that's 9:30 and 10:30. It just helps me to figure out what time of day this is happening. Okay, but the point is that when we take all of these sort of like candlesticks that represent each 30 minutes and we put them on top of each other, we compress them, that's where we start to see where the market spent the most time. And those areas are very important support or resistance levels. So for example, you can see over the weekend, there was a lot of tug of war in here. The market was trying to decide, is it going to go higher? Is it going to go lower? It spent a ton of time grinding and grinding and grinding in here before it finally decided it was going to go higher, right? Well, where did they do that? Right on top of the area where we were grinding at the lows, on Friday, right? So knowing where that support and resistance is based on both time and volume gives you clues of where to expect support and resistance moving forward. Now, once the market opens here in about 7 minutes, you will see my chart actually will show two different profiles. It will show an elongated profile and it'll show a collapsed profile because intraday, I like to see both. And you're like, Charles, that makes no sense to me. I'm so confused. Keep hanging out. I'll make it make sense. I promise. Sook is in the house. Good morning to you. Laura is here. Welcome, welcome. Jad's in the house. Good morning to you. Tides and Trade says, how about war news? Does market factor in or market ignoring? It's always factored in. So what you have to understand is any information that currently exists that is available to the market is always priced in. These are the most efficient markets that have ever existed on planet Earth. The second that something pops up on Twitter, there are algorithms that find it, analyze it. They keep track of how many other people are clicking on that tweet, how many people are sharing it and reposting it. And then they will start to trade markets automatically. This is not a human. This is a computer doing this. It will trade the markets in real time as that tweet comes out and based on the reactions of people to the tweet. So, I mean, everything nowadays is instant. The second that information exists, it is priced in. And so I don't worry about that at all. I don't worry about what's happening in the world, what's the news, what's this, what's that, because everything that matters to me is right here in front of me. Everything that I need to be able to sit in front of the computer and make money day in and day out is right here and right here. And all the other stuff is just noise. If the news about war in the Middle East is going to cause the market to go lower, do you know what it's going to do? It's going to start to liquidate. It's going to drop very, very fast. Okay? That's going to tell me something is up. If I'm flat, I want to wait for an entry because I don't know what's going on. If I'm in a long, I want to get, obviously I'll probably get stopped out anyway, but if I'm not, I want to get out of that long because the market is liquidating and I don't know what comes next, right? The price action will tell me something is going on. And then if that liquidation doesn't completely retrace, if it starts to liquidate very quickly and then it gets new selling at the lows and it continues lower, well, then I know to short because I know there's been a change in the market and that change has brought in new selling. And if we just started this new selling, guess what the market's probably going to keep doing? It's going to keep going lower. So I don't spend any time worrying about what the news is or any of that. I just look at the price. And whatever effect the news is going to have on price, I will see it in price. I will see it in where the market goes and how fast it gets there and what it does when it gets there, right? Everything is about time, price, and volume. Those three things. In terms of the price level, where does it go? And then once it gets there, how much time does it spend and how much volume it brings in? Regardless of why it does that, it will always do the same thing over and over again. It will push to a new level and it will either spend time or it won't. If it doesn't, it'll reverse. If it does, it'll either bring in volume and keep going or it won't. And if it doesn't, it'll reverse. And that's the way it works. Every minute of every day, every market on planet Earth. It is just the same process over and over and over again. So do I really want to waste my precious mental energy trying to predict what's going to happen in the news or trying to predict how the market will react to that? Of course not. I want to save my brain power for reading price. Where is it going? How much time is it spending there? And how much volume is it bringing in? Because that's where I actually have an edge that works no matter what. No matter what day it is, no matter what time of day it is, no matter what's going on in the world, that edge will always work because that is just how markets work. It's how they function. They move to a new location. We closed down here. And then over the weekend, we tried going lower, couldn't go lower, came back up, tried to go higher, couldn't go higher, came back down. So now we're going to open right here. Opening at 60.69. When we closed down here around 60.33, that's going to change people's minds. And some people who were bearish on Friday are going to cover their shorts. That's going to make the market go up. Some people who are flat are going to want to go long. That's going to make the market go up. Some people are going to predict that it shouldn't have gone up. It should have gone down, and they're going to go short, and that's going to make the market go down. And so why and who and all of that is not worth wasting my mental power on. I want to save my mental power for what is actually happening. What is the chart telling me in this moment is happening? Because that will help me to make money in the next moment and the moment after that. The last thing that's worth mentioning is this right here. This is basically measuring the imbalance between buyers and sellers. It is the volume pressure imbalance. When this gets above 95, you'll hear a little clicking noise. When that happens, that is often a moment where something is changing in the market. Okay. So we may not be able to predict what the next thing will be, but if we know when to look, then we know. So it's like, okay, now we're at the overnight high. Does something happen? Do we sweep the order books? Okay, then we're going to reverse and come back down. Or do we get to the overnight high and spend time and bring in volume there? Then we know it's going to keep going up. So that's why I say this morning, as the opening bell rings in about 1 minute, I'm seeing this area right here as a chop zone. I cannot predict where it's going to go from here. I cannot predict if it's going to go up or down. I cannot predict exactly where the support or resistance levels will be. I'm going to mark some, but there's no guarantee. But if we get up there and we get new buying, it's a very high probability it's going to go higher. And if we don't, it's a very high probability it's going to pull back in. And if we get down here and we get new selling, it's a very high probability it's going to go lower. And if it doesn't, there's a very high probability it's going to come back in. So that's the edge, right? Well, how do I find that? Well, I'm looking at where time and volume tapered off in the past, I'm looking at where time and volume tapered off in the past, right? That's my support and resistance right there. So seeing what happens when the market gets there, that's my edge for what will happen in the hours after that. Speaking of which, the market is open. We are in a chop zone. Let's see what happens. Okay, so right out the gate, the market is giving us some information. Where are we going? Straight to the overnight high. Okay, straight to 60.77. What happens up here will tell us what to expect over the next 30 minutes or so, right? If we can stay up here, we can expect over the next 30 minutes or so, we're heading up towards 60.82. If we cannot stay up here and we pull back down, we're heading back for the opening price. So that's what we need to understand. At this moment, do we bring in new buyers or not when we get above 77? World 407 says your ES on Bookmap is different from the chart. Is it live? Yes. So I am on the U contract on both. I will be clicking back and forth between the U and the M contract on Bookmap today, just because the market is currently rolling over. So there's still a lot of liquidity on the M contract. And so I need to watch both just to see changes in liquidity. That's all. As far as price levels are concerned, I'm purely focused on the U contract because that is what I am now trading. So that is the one that is currently at 60.76. Okay. So for example, on the M contract, we just took out a bunch of stops. So that tells me this first poke above the overnight high was just to take out those stops. Now, in a literal way, that price is all the way down at 60.25. It's off screen right now, but it doesn't matter. The mechanics are exactly the same, right? The two contracts are moving identical in terms of 1 point up, 1 point down. It's just the price level is different. So that's why I got to switch back and forth to see what's happening on both. But for price levels, I'm focused on the U. Okay, so we are at the overnight high. Now the question is, can they hold it? Can they stay up here? If they come back down through the halfback, it significantly increases the odds they're coming back through the opening price. If they can stay above the halfback, it significantly increases the odds we're heading to yesterday's high around 60.85 or 60.83. So if they can hold this support, it's bullish for a move higher. If they come through the halfback, it's a sign that they failed and they're coming back down. So I'm keeping a very close eye on 60.72. Can we stay above it? For what it's worth, I think it's going to fail. I think we're going to pull back through the open at least once more, looking for support around 60.60, but we won't know until they break that halfback at 72. Any other questions from the chat? Let me know. Happy to answer away. DNK says, can we take a look at the NQ? We certainly can. I bet you it's right at the same spot, right? Overnight high. Yes, sir. Right at that overnight high. So the NQ is looking bullish. Yeah, I'd put this exactly the same as the ES. So you've got sort of a weak low right here. This implies the fact that the market wants to come back to the opening price once more. But as long as they stay above the halfback, as long as they stay above 22.059, as long as they stay above there, they are likely to continue higher. Okay. But this is very weak. So they've got a magnet pulling on it to come back down. So you don't want to be long if you pass through that opening price. Or sorry, that halfback, because they will come back for that opening price. So both markets are trying to hold the overnight high right now. We have not yet decided if we can hold it. We're waiting to see. So I'd say both markets are bullish at the moment, but it could change if they cross through that halfback. Resistance. Man, I typed that way too fast. Can the buyers hold 77? Dun dun. Dun dun. Now you say to yourself, Charles, what's the big deal? The market's just sitting here. It's been sitting in one spot for the last 4 minutes. Why does this matter? Because this is our carry forward for the next 30 minutes. If this holds right now, if 77 can hold, we are heading up towards 87 and looking to continue higher from there. If it fails, we're coming back down through the opening price at 67. So this is an important moment, and the market is trying to decide. Is it going to go higher? Is it going to get more liquidity to change hands by stopping out shorts and getting in FOMO longs? Or is it going to get more liquidity to trade hands by liquidating the market right now and pulling back down through that halfback? They're trying to decide, and we're playing tug of war, and it's a big deal. Smith says, hey, I want to make Bookmap understandable to Hindi language to people of East Asia. For this, I want to collaborate with Bookmap. Can you help in any way? I cannot. I don't work for Bookmap. I run my own company called Pirate Traders. I'm just live streaming for them. But do reach out to Bookmap. You can just reach out to their support@bookmap.com. Email them and let them know. I'm sure they'd be happy to hear what you got to say. Also, just FYI, with AI, where it's at right now, any educational content that they've created, you can instantly get the, at least the, dialogue parts, changed over to Hindi. So it should be pretty easy. Okay, I would describe myself as bullish. It looks like the market wants to head up and test yesterday's high at 60.82. The same way they came up here to the overnight high at 77. They want to see if people are willing to do business. Okay, so far people were willing to do business. So price is likely to keep going up. Once we get to yesterday's high, Friday's high, and that is the high on the U contract, we'll find out if it can keep going. No questions from anybody in the Discord, huh? Discord's quiet today. All right, guys. Good morning to Willie T. Welcome, welcome. E-Cycle says, please gold. I can look at gold on the candlestick chart. Yeah. Yeah. So to me, this is a good long on gold right now. And let me tell you why. Because this is balance in here, right? And so the market is trying to break out of that balance. If you go long right now and they're able to break out that balance, you can take on a lot of potential reward with very little potential risk. Okay. Also, if it fails, and let's say today's candle gets below the low from yesterday's candle, then it's likely to start heading all the way back down here towards the 3200s. Okay. So you can make back your losses if you're wrong. These are the type of areas as a swing trader I love to do business. When a market is right at a balance area high, because even if I'm wrong and I get stopped out on my long, there's plenty of money to be made on the way back down because the next trip down will be like these trips were. Okay. Also, another thing that is worth looking at in gold right now is the trend line up. So if you wanted to be more cautious and you didn't want to enter right now where there's uncertainty, you could just basically draw a trend line from the lows down here. And then you could look for it to come back and test that. So if it finds support around 34.02, then you look to buy the bounce with a very, very tight stop. So I'm marking the current high of the market as a weak high. What does that mean? It means the market didn't accomplish the task it was set out to accomplish. What did we just say the market is trying to do? It's trying to get above Friday's high so that it can see if there's people willing to do business up there. It came right up to Friday's high, but didn't get above it. So that turns it into a little magnet saying, hey, price will probably want to poke up here once more. Tide says, I'm new here. Do you trade futures or options, bro? Both, bro. I trade futures and options on futures. Yeah, so for me, it's generally just depends on what the setup is. If I'm looking at things over a longer term basis, more of a swing trade. So for example, if I thought, and this is not a trade idea, but just as an example, if I thought the market was going to fail here and go much, much lower, let me go back to the ES. So let's say, I thought the market was going to turn around and come back down towards the lows. Then I'd want to buy a put. Okay. Because my risk is capped. It works or it doesn't. And it's a great setup in terms of getting in, near the high for the move back down towards the low. Or if I thought the market was definitely going to go to all-time highs, I would buy a call right now that expires a week from now that has a strike price halfway between where we are and the all-time high. But that's more of like a swing trade thing. For day trading, I'm generally just using the futures, just simply going long or short at a particular level with a stop at a particular level, like right now, going long at the overnight high with a stop below what was the halfback, what was 60.72, and then targeting a move to, where we just touched the first resistance level, 60.87. So that would have been the trade, right? You see the market push above. You see that it's finding support. The halfback is where they're going to liquidate. So that's where you want your stop to be. And then your risk to reward for the trade. So now that we got to this first resistance, now we have to turn yesterday's high, again on the U contract, the Friday high on the U, into support. So can they hold the 60.82 area and turn it into support? If they can, we look to push up into the next resistance around 60.96. You guys can see I have moved my level that I am bullish above or bearish below because the market has changed, right? Something has changed. We are no longer trying to find support at the overnight high. We're now trying to find support at yesterday's high. So if that doesn't hold, it's less of a chance the overnight will hold. It's still a chance. It's still support, but less of a chance. And if the overnight high breaks now, then it's over. So I'm choosing this area around 76, give it a little bit of breathing room. But the idea is basically if the market is going to keep going higher today, it needs to stay above this overnight high at 60.77. Okay. It should hold that support if the momentum is going to continue higher in the hours ahead. That little sweep of the order books there at yesterday's high took out a lot of contracts. Okay. That's fine. Nothing wrong with that. That's one way to get liquidity, to sweep the stops. But now we got to bring in those new buyers up here to keep it going. The most bullish thing you will ever see is a combination of short covering, so shorts being forced out of their trades, being stopped out, and new money buying. You get short covering and new money buying, and that market is going to keep going higher and higher and higher. It's all just part of the auction process. It's all just part of understanding the adoption curve. That each tick the market moves higher now, it's convincing more shorts to cover and convincing more new longs to enter the market. And so you can trust that that momentum is going to keep going up as long as they hold the support, as long as they bring in those new buyers. Brandon says, can I explain how we know where there are new buyers or sellers? This is an example. It's a perfect example. So you see this right here. What do you see in the order book right here? Something instantly changed. Look at how all of a sudden the liquidity changed. Look down here. Do you see how all at once they pulled orders from 75, from 74, from 73, from 72, from 71? All at once they pulled all these orders. That's sweeping the order books. Okay, they just did it again right now. So we see that it stops being taken out. That's old business, right? That's sellers from Friday getting squeezed out of their shorts. What we want to see after that is new buyers. So that's just anyone going long above that level. Above right there is new buyers. So it happened really quick just now, but that's what we just got. This little pink area, that's new buyers. And that gave us what? Another sweep of the order books, took out some more stops. So now what do we got to do again? Bring in more new buyers up here. If we can bring in more new buyers up here, guess what's going to happen next? The market's going to go higher. So how do we know if we're bringing in new buyers? If the market stays up here. If it does not come back down, we're bringing in new buyers. If it comes down, we are not bringing in buyers. Right? So that's what we're looking for. Where does price go? How much time does it spend there? Does it come back right away? Did we, like we just did right now, swept the order books to the upside? Did we go like this and then come right back down? Right? Or did we do like this and then now we're up at the higher price, staying up there, spending time? Look at those pink candles. We're bringing in volume. What does that mean? It's going to keep going. There's more stops to take out. There's more liquidity above. So now we're targeting a move to the high at 60.97. And we're going to ask the same question there. Do we bring in new buyers? If so, we look to continue higher. You can go back and watch the first 10 minutes of this live stream. I talked this exact scenario through. I said, if they get to the overnight high and they bring in new buyers, they're heading to the previous day's high. If they bring in new buyers, they're heading to the overnight high. If they bring in new buyers, they're heading to 61.05. So far, what have we done? We pushed up, we brought in new buyers, we pushed up, we brought in new buyers, we pushed up, and then just brought in new buyers. So where are we going to do next? Push up. And then if we can bring in new buyers, we'll push up again. It's just an auction. It's very simple. Is there somebody willing to do business up here? Great. It's going to keep doing business. Now, bigger picture for the day, I'm not loving the look of this, right? Bigger picture for the day, it's starting to feel like we're going to make our move in the first half an hour or hour of the day and then come back down because it's a lot of stops up here. We're moving very, very fast. So that means it's mostly FOMOs on the long side. The new buyers are chasing price. They're not good, strong hand buyers that are buying a dip. So that means it's not going to keep going forever. But for now, we get to the next target and we see what happens. And if we bring in new buyers, you better believe we're heading to the next target. And we just keep doing that until it finally runs out of steam. Now, am I telling you to go long right now? Definitely not, right? The long was in here. The long is not up here. Now you're chasing price and your odds are getting worse and worse the higher that it goes. So what you want now, if you want to go long, is you want the market to chill out. You want it to dip back down just a little bit, and then you're either buying the 90s or you're buying the like 84 area. Okay? You don't want to be buying up here because it's just too late. But it's all good because if you can't buy, you know to either wait for the market to pass back through the halfback, to pass back into the range from Friday, and then you can short, or you buy the dip if it's holding a support. And if you just go back and replay what I said first thing this morning, I said if we got above the overnight high, we would not have time to wait around. We would have to be ready to get in a trade very, very quickly. Why did I think that? Because everybody was so bearish on Friday. There were so many shorts in the market. There were plenty to squeeze. So if you wanted to get into the long today, you gotta do it fast. As soon as you see that new buying above the overnight high, you can't wait around because then you miss it. But the good news is if you miss it, there's always another chance. So there's no reason to feel FOMO. There's no reason to get upset. There's no reason to get excited. The thief did kindly spoke. There are many here among us who think that trading is a joke. All right, so what do we just create again? We did it earlier here at yesterday's high. We just created another week high. We just created another magnet that increases the odds the market needs to poke above that overnight high from last week. So now we're looking for a dip. We're looking for those strong hands to step in and buy support and then come back through the high, 60.98. If you guys are enjoying this stream, if you're finding it educational and helpful, I highly recommend you consider signing up for the Pirate Traders Brigade. There's a link at the top of the screen. You just head to piratetraders.io/join. It's $20 to join, and that gives you a month-long membership. And you know, I do these live streams every single morning for the first hour of the day. I send out an email every single day with my opinion of what the market is doing and how to look at things and some price levels to target if you're looking for trades. And I do all of this for $20 a month, which obviously is less than a single point on the ES. So I make it ridiculously cheap in order to make it ridiculously easy for you. If you want education, you want guidance, and you want community, you want people to hang out with and talk about markets live throughout the day, the Pirate Traders Brigade is the place to be. And it's only $20. That's nothing. It's literally nothing. Less than half a point on the ES. And so you say to yourself, if every day you had me saying, we're above the overnight high, this is bullish, I'm looking to test the previous day's high, could you get in a long trade and make 1 point of profit in a whole month of me telling you that every single day? Well, then the membership pays for itself, right? Could you avoid FOMOing into a long at the high and instead wait for the dip? That could prevent you from losing a point. And then the membership pays for itself. So if you are thinking about joining, I highly recommend you give it a try. You can cancel anytime. So why not just give it a try? Join the brigade. Come hang out with the cool kids. Okay. So now we repaired that week high. We're testing this overnight high right now. So same story we've been talking about. If they can stay up here and bring in new buyers, we're then heading to 61.05. If they cannot stay up here and we start to pull back down, we need to test some support and see if we can hold it. I would say bigger picture, this is bullish for the day and increases the odds the market wants to go higher, but it does feel a little bit like they are getting themselves overly long, overly fast. Some days the market does a majority of the move that it's going to do in the first hour. And this feels like it's one of those days. So I'm pretty sure we're going to poke up and test 6105 up here. I'm not sure the market can go much further than that. I have a feeling once we start to get up there above 6105, it's going to run out of steam and come back down. Okay. So it is bullish. The momentum is up, but don't expect it to last forever because this is more short covering and FOMO buying rather than strong hands buyers waiting for a dip and buying support, which is much more reliable to keep going for hours and hours and hours. Does that make sense? Any final questions for the pirate before I say goodbye? Bossman says, is it considered a weak high because there is no excess? That's exactly right. The lack of excess at the high tells us that it's not over. Now, right now at this moment, we do have good excess. We have enough excess. So the high is good for now. But earlier when we were right at that overnight high, there was not good excess. So we had a weak high. Crypto Trader, thank you. Appreciate you. Mark Q says, would there be support at 60.66? No. That would be an absolutely terrible place to go long, 60.66. So let me try to just put it to you this way, right? Where was the market when it opened? It was at 60.67. Okay. What has happened since then? So we'll say in the first 33 minutes of the day, what has the market done? It's gone straight up. What does that mean? It means a majority of the people who have entered trades since the market opened, a majority of the people that have entered trades in the last 33 minutes have been longs. We would not have gone up if it were not a majority, right? We only go up when there's more buyers. So way more people are long the market right now than short. So if the market were to come all the way back down there, who's left to buy? No one, because everyone's already gotten long. And also, what if they didn't take profits? Hopefully they did. Hopefully they took profits at the previous day's high or the overnight high, because hopefully they have market profile software and they know where the distributions are and they know that the market is likely to reverse there. But let's say they didn't. Let's say somebody got long, down here or up here or up here, or maybe they're getting long right now at this moment and the market turns around and it comes all the way back down to the opening price. Are they going to add more to their longs? No, they're going to get squeezed. That's where they're all going to stop out. All these buyers, the buyers here and the buyers here and the buyers here and the buyers right now, that's where they have their stops. That's the worst place to go long, where everybody has their stops, because that's what could cause the market to liquidate much lower. So absolutely not. That is not good support now. Now that is likely a place where the market will liquidate and go much lower. What would be good support right now is yesterday's high. That would be excellent support, or the overnight high. That could be support. So let's say the market gets up to 6105, as I'm predicting, and then it runs out of steam and it comes back down. These are good areas to look for support, because as long as they hold, you're not going to squeeze these buyers and you're giving the dip buyers a chance to step in. So that's a great place to look for support. Not there. That's the worst place to look for support. I hope that makes sense. You must understand, what is the business? What is the current business? Are more people long right now, or are they short? That tells you what happens next, because eventually everyone that's going to go long today will have gone long, and the only place for the market to go is down. And then the question is, did all those longs get a chance to take profits, or are they starting to get squeezed? Because then it's going to go down fast and far, right? So you just always want to keep track of, where is the current business? So right now, the current business is buyers trying to hold the overnight high from the 12th. Right? If they can hold that overnight high from the 12th, it'll keep going higher. If they can't, it dips back down to look for buyers below. And this is just the auction process. Every day, every chart, all the time, it's always the same. So if you can learn to read that, it won't matter what's happening in the news or whatever else. You've got all the information you need right in front of you on the chart. For those that are getting a little nervous here, or God forbid, thinking about shorting this, there is an iceberg up at 6,100. That increases the odds that we are going to keep poking. So I definitely think 6,105 is in play today. Beyond that, I am not sure. I'd have to see new buying up there to be bullish beyond 6,105. With that, I must say goodbye. Thank you all so very much for joining me. Please join the brigade if it's something that you're interested in. If not, come back next Monday and hang out with me here. Have a great day, everyone. Bye-bye. Members of the brigade, let's set sail.